Hello and welcome to another Daily Dose of Insights powered by Container Exchange. My name is Christian, and every other day we bring to you the key news, stories, and data points that move container markets and hence your business. Today it's Monday, so we have what we call a Macro Monday here at Exchange, where we look at the week ahead and what kind of especially macroeconomic data points are to be released and what their expected impact will likely be. So let me quickly share my screen to give you a little bit more guidance of what I'm talking about. And we'll start with a quick recap. Last week, we had the Fed symposium in Jackson Hole. The most important US central bankers convened to discuss current trends, themes, and of course, the monetary policy going forward. And Powell's much anticipated speech on Friday gave a lot of, or shed a lot of light into the Fed's thinking around interest rates and the economy at large. Pretty much the background is that the economic climate is cooling markedly. Jobs numbers were not as good as expected, and of course, inflation rate is now down to the sort of roughly 2% corridor that the Fed is targeting. And so the door for a number of interest rate cuts is wide open, starting with at least 25 basis points in September, possibly also 50 basis points. Markets are currently pricing in a likelihood of 50 basis point cut of about 1 in 3, so 33% likelihood there in the next Fed policy meeting. And that means for this week, of course, we're very much focused on what the data says about the rest of the world, specifically about the ECB and Europe. The likelihood of another ECB rate cut of another 25 basis points is very high in its next policy meeting in mid-September. And very likely that this week's data also will confirm this. So for example, on Wednesday, we have the German consumer confidence to be released by the IFO. Confidence remains very, very low at about minus 18 points, similar rate as in August. And then on Thursday and Friday, we have inflation rate data coming in from a number of European countries and also the euro area. And also here, rates are to remain relatively stable. For example, 2.2% year-on-year in Germany, and the same rate in the euro area. And that, of course, confirms the likelihood that the ECB will cut another quarter percentage point or 25 basis point in its next policy meeting. Apart from that, of course, the rest of the world is also not looking so good. We have sort of growth worries, growth concerns, not just in the US and in Europe, but also in Asia. So there's concerns about the domestic economy in China, property crisis looming, high debt burdens, sort of sputtering domestic demand, and the export sector also doesn't look so promising. So it looks like we're heading again into a bit of a cooler economic climate, and very likely global interest rates will mirror that. Now, that's it from us for today. Of course, feel free to comment under this video. Very, very keen to hear your views on this and how you expect that this economic climate will essentially impact freight rates, not just ocean freight rates, but also container leasing rates going forward. That's it. Thank you so much for tuning in, and talk to you all on Wednesday. Take care.